part of equity which comes from within the company. It's the part of the earnings that is not distributed via dividends, but is rather retained within the business. So can you tell me why firms why they reinvest part of their net income within the business and not pay the earnings out as a dividend? Do you have an idea? Why would a company or why would a shareholder say, okay, I want to leave money in the company, not it as a dividend? Which companies do you think retain most of their earnings? What are the types of companies that retain most of their earnings? And what are the types of companies which are rather Ray says every company. I mean, so this is maybe isn't completely true, because some companies really pay out all of their earnings via dividends. Yeah, and this is very mature companies in stable businesses. Yeah, but most of the growth companies, think about Facebook and Google, they retain most of their earnings. And the reason is that they have good projects, and the share owners think that they are better off when the companies pursue those projects essentially. So this is why the better the projects are, the more likely are the share owners to say to the companies, okay, I want you to reinvest the money and make a good return on capital for me. Yeah. So growth companies reinvest most of their earnings. Mature companies don't reinvest. Excuse me, excuse me 1 second. I have to do something for 30 minutes, and then I will be back. 30 seconds, sorry. So sorry for that, but now we are already back and can proceed with the lecture. So yeah, Ray said the companies which are required to retain certain proportions of their earnings. Yeah, of course, there are certain types of industries which retain most of their earnings, that they are required, yeah, because they need the money. They need the money to stay competitive. This is correct. Yeah. Okay. Very good. So let's continue. This is the statement of changes in equity. And what is it? What is it? Therefore, the statement of changes in equity, it shows how equity has changed over a given year. Yeah. So when you look at it, it starts with the equity at the beginning of the year, and it ends basically with the equity at the end of the year. Yeah, and whatever happens during the year with the equity is here. Yeah, so you see here that net income actually increases equity. The higher the net income, the higher will be, all things equal, the higher will be the equity at the end of the year. Other comprehensive income also increases our equity. Dividends reduce our equity. Why do dividends reduce our equity? Because they are paid out to share owners. Yeah. So when the company pays dividends, basically the money leaves the company. Yeah. And then we have other transactions with share owners. Can you think of other transactions with share owners that are not dividends? What are examples for other transactions with share owners? For example, share issuance. Yeah, share issuance and buybacks. Yeah, very good. So buybacks is the opposite of a share issuance. And a company issues shares, then essentially capital is raised and it has more equity after that than before the issue. And when a company buybacks its shares, then equity is decreased by that means. Yeah. So this is the other way around. Yeah. Buybacks is a minus. And share issuance is a plus in equity. Yeah. Okay. So, very good. Next slide. Okay. And then we talked about the next financial statement. We have already talked about the income statement, the balance sheet, the statement of changes in equity, and this is the cash flow statement. And the cash flow statement, basically here, this statement is about the cash and how it changes. Yeah. So at the bottom line of the cash flow statement, you see the change in cash, and all the subcategories of the cash flow statements show the sources and the uses of cash. So where does it go and where does it come from? Yeah, and it is subdivided into cash flow from operating activities. This is the main business, the core business of the company. Yeah, and this is usually, do you think this is usually positive or negative for a normal company? Do you think it's more likely to be a plus or a minus in a normal good company? Yeah, it says it's a plus. This is correct. Yeah, normally cash flow from operating activities is positive. Yeah, in company, if the cash flow from operating activities is negative, then the company really is in a mess. Yeah, even companies that report a loss normally have a positive cash flow from operating activities. Then The second element of the cash flow statement is the cash flow from investing activities. What do you think? Is this more likely to be positive or negative? Cash flow from investing activities. Negative, exactly, because normal companies have to invest, yeah. And if you invest, you need money for this investment, yeah. So that's why cash flow from investing activities is usually negative, and for growth companies even more, because growing companies need more money to grow, yeah, and to invest, and that's why this is even more negative for growth companies. And then we have the cash flow from financing activities, and I think it is not clear whether this is positive or negative. I would say it depends. Yeah, for some it depends on the company, and it also depends on the year. Yeah, but you cannot say that this is normally a positive or negative. Okay. Very good. I see that you remember a lot from last session, which is a good thing. Yeah. So the notes, we have already said that the notes explain those statements. Yeah. The notes explain the statements. They contain additional information which adds to the statements. It is no specific in no specific order, but normally it starts with a summary of significant accounting policies, and then there's some supporting information and finally you also see some disclosure items. So this is, for example, this is an example for Starbucks company, and here you see the notes, or the order rather, of the notes for this company. But it's very similar. If you look at different companies, other companies, you will see that the order of the notes is very similar for most companies. Okay, then we will come to an exercise. Actually, several exercises. We will, from time to time, we will do those exercise rounds, and I will ask you the exercise, and then it's your task to answer. Yeah. So the first exercise is the amount of a company expects to collect from companies from customers. Sorry, appears on the statement of cash flows of the balance. Appears on the balance sheet in the current asset section, income statements in the expense section, or balance sheet in the shareholders' equity section. So please tell me, think about what is the correct answer, and then tell me your answer over the chat. I would recommend. I would suggest. Where does the amount a company expects to collect from customers appear? And A is not correct. Think about what is what is the amount a company expects to collect? What is it called? Yeah, Jan, it says it's balance sheet in the current asset section. This is correct. We are talking about accounts receivable here. We're talking about accounts receivable. Accounts receivable. Receivable, and the answer is B. Vielleicht meine Hose. Yeah, so B is correct here. This is the second exercise. Think about what is the correct answer for the second exercise. Revenues are decreases in liabilities resulting from paying off the loans. Revenues are increases in paid-in capital resulting from the owners investing in the business. Revenues are increases in retained earnings resulting from selling products or performing service, or all of the above. Okay, Jan says C, and C is correct. Yeah, C is correct. Revenues means you sell products and your revenues increase your retained earnings, increase your equity. Yeah, this is good. And so on. The accounting equation can be expressed as assets equals liabilities minus owner's equity, or assets plus liabilities equals owner's equity, assets minus liabilities equals owner's equity, or owner's equity minus assets equals liabilities. Yeah, again, it's C. Assets minus liabilities equals owner's equity. Yeah, this is the accounting equation after it has been transformed. Good. Next one. Which financial statements covers a period of time? Okay, A is not correct because the balance sheet is about a snapshot. Yeah, the balance sheet is about a snapshot. This is not a period of time. what about the income statement, and what about the statement of cash flows? Is it a period of time, or is it a snapshot? Income statement. Income statement is a period of time. Period. And statement of cash flow is also a period. Yeah. So the correct answer is both. Income statement, and this is cash flow statement. It's also a period. So the correct answer is both B and C. Yeah, both the income statement and the statement of cash flows covers a period of time. Yeah, because the income statement shows the net income that the company has produced over a year, over a period of time, and the statement of the cash flows shows the change in cash that happened over 1 year. Yeah, this is also over a period, for a period. It's not a snapshot. So it's both B and C, and that's why the correct answer is D. Okay, good. How does net income affect the accounting equation? Look at the possible answers and then tell me what is correct. Okay, Ray says D. And D is correct. Yeah. When you have net income, shareholders' equity is increased. Yeah, we have seen that. Yeah, remember. Where did we have it? Let's go back. Here, net income increases our shareholders' equity. Yeah. And let's go back to our so net income increases our shareholders' equity, and because of the accounting equation, when equity increases, assets also have to increase because liabilities are not affected, of course. Yeah. So when equity goes up, assets also have to go up. So D is correct. This is the next one. During the year, company A's shareholders' equity increased from 38,000 to 50,000. The company earned net income of 18,000. How much in dividends did the company declare during the year? Is it 0? Is it 6,000? Is it 12,000? Or is it 7,000? Let's look back at our shareholders' equity. Statement of changes in equity. We start here with equity at the beginning of the year. Yeah, this is what is given in our example, in our exercise. And we end with equity at the end of the year. We have net income, which we have to add. Yeah. And we have to subtract dividends. Yeah. Other comprehensive income and other transactions with shareholders are not mentioned. Yeah. Okay. So then equity at the beginning. Beginning is 38,000. We have equity at the end. At the end of the year. Which is 50,000. We have to add net income. Which is 18,000. The question is, how much is dividends? Dividends? That's the question here. Okay. Ray says it's 6,000, and this is correct. Yeah. If you put in 6,000, then the entire equation pays off. Yeah, it levels off. So 6,000 is the correct answer, which is B. is the next one. We have a company holds cash, owes 27,000, accounts payable, it has accounts receivable of 40,000, inventory of 34,000, and land that costs 55,000. How much are Rochester's total assets and total liabilities? Think about it on your own. What are assets? Of the things that are mentioned, which are assets? Is cash an asset? Yeah, cash is correct. So we have 11,000 in cash. It's cash. Is accounts payable an asset? The liability. Exactly. Accounts receivable is an asset. Accounts receivable. Do I have to add it? Yeah, is asset. So accounts receivable. 40,000. Accounts receivables. What else do we have? Inventory. Inventory is also asset. How much is inventory? 34. And land, what about land? Land asset? Or is it a liability? It's asset, yeah? So land is 55. Land is non-current asset, yeah. So land. If I add it up, then what is the correct amount? Plus. Can you calculate it? 11,000 plus 40,000 plus 34,000 plus 55,000. $140. Okay. 140,000. Is correct. Yeah, so this is the sum. Now let's look at liabilities. What do we have for liability? We have only 27,000, yeah? Only accounts payable. We have only accounts payable. This is the only liability we have here. So the correct answer is C. Yeah. Does it make sense? Yeah, because we have no other liability. Yeah, so this is only accounts payable. This is the only liability. There is no other liability. Okay. This is the next one. Pinker began the year with cash of 30,000 and a computer that costs 22,000. During the year, Pinker earned sales revenue of 135,000 and had the following expenses: salaries, rent, utilities. At year end, Pinker's cash balance was down to 18,000. How much net income or loss did Pinker experience for that year? How do I calculate net income? What do I have to do? And so here I have to look at what is my sales revenue. Sales revenue, and my sales revenue here is 135,000, and I have to deduct all the expenses. Yeah, I have to deduct all the expenses. What is irrelevant, what is not relevant in this example is what is cash, yeah, and a computer, because these are assets, and in the income statement, when I calculate net income, the assets are irrelevant, yeah. I have to deduct all the expenses, and the expenses are salaries, which are 57,000. Rent expense, which is 11,000. And utilities expense, which is 4,000. Okay, K stands for 1,000. Yeah, probably have heard that. So now, if you deduct all the expenses from my sales revenue, what do I have? The correct answer is 63,000. Yeah, correct, Ray. C is correct. Yeah. Okay, let's go on. Very good so far. During the year, a company which is called EcoWash has 120,000 in revenue, 50,000 in expenses, and 4,000 in dividend payments. Shareholders' equity changed by how much? How much did shareholders' equity change? If we go back to our statement of shareholders' equity, we see that we have to add net income, and we have to subtract dividends. So how much did our shareholders' equity change? First of all, what is our net income here in this example? What is our net income here in this example? Our net income is revenues minus expenses. Yeah, revenues minus expenses. Revenues are 120,000. Expenses are 50,000. And that's why our net income is 70,000. Yeah, but this is not the answer, because what do we have to do with dividend? We have to deduct dividends. Yeah, if we wanna have our change in equity. Change in equity, this is net income. Net income minus the dividends. And this is 70,000 minus 4,000. Yeah. So 66 is the correct answer. Next one, which item or items is or are reported on the balance sheet? Inventory, accounts payable, retained earnings, or all of the above? Have a look at them and then tell me your answer. Any idea? What is inventory? Is it listed on the balance sheet? Yes. Accounts pay is an asset. Yeah, asset listed on the balance sheet. Accounts payable is a liability, which is also listed on the balance sheet. Retained earnings belongs to equity, which is also listed on the balance sheet. So everything is listed on the balance sheet, is reported on the balance sheet. So all of the above is correct. Yeah? Okay, very good. Let's go on. The shareholders' equity of Diakovsky company at the beginning and end of 2016 totaled 15,000 and 20,000 respectively. Assets at the beginning of 2016 were 27,000. If the liability of Diakovsky company increased by 9,000, how much were total assets at the end of 2016? Use the accounting equation. Okay, what do we have to do here? We have to, I think, we have to write the accounting equation at the beginning. Assets equals equity plus this is a plus, plus liabilities, and this is the beginning. It's the beginning of the year. So what do we have at the beginning of the year? Shareholders' equity is 15. $15,000. What else do we have? Assets 27. So what are our liabilities at the beginning of the year? If assets are 27,000 and equity is 15,000, liabilities is 12,000. Yeah, 12,000. This is correct. Now let's look what happened to the accounting equation during the year. What do we have here? It says the exercise says if the liabilities increased by 9,000, so we have to add 9,000. How much were total assets at the end of the of 2016? We have given that equity at the end is 20,000. Equity is 20,000. Yeah. Equity is 20,000. This is here. Yeah. And we see that we have given that the liability increased by 9,000. So that's what we have here. So let's calculate the accounting equation for the end of the year. This is equity our liabilities. What is our liabilities at the end of the year? $21,000, yeah, 21,000. So the correct answer has to be, you have to sum up these two, has to be 41,000, correct? Very good. Yeah, you got it right. It's 41,000. Very good. Good job. Okay. We will do a break here, 10 minutes again, and then after the break we will go on with this